Hello everybody, if you're watching this video, you're curious, should you buy Wendy's? Throughout this video, it's going to be a very brief, quick explanation if you should or should not buy Wendy's. The other day I heard on Bloomberg they were talking about Wendy's and I was like, there is no way we actually made it out of Wall Street bets. So just looking at the basic fundamentals of Wendy and what's happening in Wendy's, when you look here on the right side, when you look at the top holders of Wendy's, you're able to see that a quite big portion. I mean, if you add these numbers up, 15, that's 26, you add the 9, you're looking at nearly a 40% ownership just by institutions. Now, when you're looking at the short interest, you have 5 days to cover. Now, we do have a slightly increased over the last month in terms of how much people are actually going short on the Wendy's stock. But the truth is, I believe we are in for a short squeeze. Now, do I say that in a sense of I would buy and hodl? No. I would say that in a sense of I would probably buy in at the market open and I would close my position, within a day, within 2 days, before the 5 days runs out. You're looking at maybe when markets open on Monday, you probably have till Friday. That is the absolute latest. But I personally like to close a lot of my positions at the end of the day because God knows what happens overnight. And if these companies here decide they want to dump, you are absolutely destroyed. But they have been holding these stocks for a minute. Now I'm going to switch to the next page here. Okay, we're back. So as you can see from this information you're seeing in front of you, we have new buyers that actually bought a couple months ago and they were kind of anticipating this. And you have to understand that Reddit is nothing but a data mine for all these institutions. Institutions are paying cash dollars to be able to scrape Reddit full time, every single post, and they cluster these into groups to understand what the retail traders are going to do. So you see some of them are deciding to sell out, but at the same time, there's some of them that are joining the game brand new, and there is some that are adding to their position. Now, this is, a couple, 2 months or so old, but it's also important to understand, like, hey, just because, we're seeing these buys, you have to also see that there are different companies that are selling. We have BlackRock selling around 3 million. We have Harris selling 4 million. Now, these might be companies that are not interested in taking on the risk of the Reddit squeeze because maybe, it's possible that this could really become the next GameStop. But I'm not saying that in the sense of, guys, FOMO in. I'm saying that in the sense of if you're an intelligent trader and you are here to make a quick buck, not a long buck. A long buck when you're trying to believe, oh, we're going to $300. You are one of those people that are holding the bag when everyone dumps. You have to have realistic expectations. If you even double your money, you got to be insanely happy. But going in for the quick scrapes, quick little scalps, in and out, same day, end of day, that's just spectacular. So this is just to paint a picture to understand what is actually happening right now. So when we're looking at specifically the revenue and how the revenue has been growing, well, it really hasn't. When you compare it back all the way from 2021, 2022, 2023, and you go forward, well, I mean, we actually kind of basically peaked in 2023, and we are just trying to hit those levels. We are basically testing. I mean, it's crazy to say, but it's a resistance because, they hit that level and then they weren't able to really break it in 2025. And this is not, I mean, if you look down here at the revenue trend, it is not a clean line up. They had a pullback. And in that pullback, it's important to understand that shouldn't represent growth. If anything, that would represent, losing price going down. But what is happening, look at the net income trend. It is not a specific growth. It is not growing month over month, quarter over quarter, year. By the way, this is yearly. So it is not growing year after year on the fourth quarter. That means, we're not expecting something intense. Now, the next quarter growth we're expecting is a negative growth, but by the next year, we're expecting a gain. It is absolutely, it's havoc, but it has been surprising people on these earnings reports. And we do have an earnings report coming up. As you can see, the last one here was 0630, where it beat. So it is potential that that could be a part of the rally, all a part of the short squeeze, just to completely demolish. Because you know what happens when a lot of Wall Street bets boys see a stock that is popping up, for example, the Wendys, for example, the GameStop. They believe that the people don't have enough power to actually pump one of these stocks, and they end up getting short squeezed. As I showed you earlier, we have 5 days left, and we just coincidentally are, June 27. We're going to open markets on the 28, 29, on the 29. So, you might see a real short squeeze coming up, which is why I also say when it comes to binary events like earnings, it is a quick scalp. In, out, no FOMO, no regrets. Doesn't matter if you see it running for another 10 miles. You just take your little bite and you end up happy. So this is the last thing I wanted to show you guys. And basically what I want to show you is where I personally would go in for a swing trade. Now, I am a very big fan of filling gaps. What do you mean by filling gaps? Well, I mean, when you're looking at the chart here, oh, it wants to take a little minute to load. Okay, so, this right here, where we just opened up, flew through, even this kind of gap that was happening at 1:30 p.m., we are looking at refilling that gap. So if we scroll forward, I believe that we will visit the either 745. This is where I would get a little base entry. And what I would personally do is I would ladder my entries in 745, 735, 728, and then, just hope for the extra swing over just to average my price down. I'd probably go right here where this low was on the 26th at 715. So basically, long story short, let's say you were going to enter in with $1,000. I would never buy right here where it's consolidating. It's not even sure. When you see this kind of consolidation, that's basically telling you, I don't know where the price is going to go. Why would you enter in uncertainty? Now, of course, when it falls, you might be catching a falling knife, but you're entering at a much more supported level. This is significant support. This is considered technical support. These lows here are considered technical support. That's what I would personally do. Now, if we throw on the moving averages and see what comes up here, let's see if we have any. No, there is none down there. But that is besides the point. That is where I would enter regardless, because it's just, what I do. I don't like to enter in no man's land. I rather wait for the pullback, because a lot of people are going to enter here, and then what's going to happen is the price is going to spike up. Let's say it does spike up to these levels and it tests that high, and then it dumps down back to this. It's literally, what if it just repeats and you end up stuck entering here, going up to there? Now you regret not selling it as it's falling. Maybe you panic sell, maybe you stop loss right at your entry, and then you see a dip and you're like, thank God I didn't buy back in. And then, like an hour later, 2 days later, it ends up rallying to $10, $11. So that's exactly what I would personally do. Now, zooming out, looking here, yeah, I mean, as I said, those levels are clearly, prior support levels. 715, 718 looks like a better level to even get in as your final entry. But this level right here at 692, I mean, this is why you have to ladder your entries, because you have so many great entries to get into. And then, I'd probably take my first profit, a very small chunk, let's say 15% of my position right here. And then I would take another 15% at 882. And then I would go ahead and take a pretty big chunk. So we're down 30% of our position. Maybe I'd take 45% of my position off here at 940. And the rest I'd let it run. I'd let it run, not caring what happens with it. But if it does end up coming back to revisit my entries down here, oh yeah, I'll just get stopped out and take my loss. Well, it wouldn't be a loss, but I would take my loss of potential gains. But when you're laddering in, laddering out, it's spectacular, and you guys will end up really enjoying it.